Hello, everyone. Good evening, and welcome to the third edition of Moneycontrol Masterclass, our flagship platform where we bring you the most relevant voices to talk about topics that matter to you, topics that are of interest to you. Now, if you look at 2021, it's going to be a very unique year because it's really going to be a year of validation as far as India's startup story, new economy story is concerned. There's going to be an Indian internet IPO rush. A lot of startups are all set to go public. But what should entrepreneurs keep in mind? What is this going to mean for the new economy? Will they be finally able to demonstrate listability? To discuss all this and more, we have two very special guests, seasoned entrepreneurs, two of India's most respected voices. We have Sanjeev Bikhchandani, the founder and the executive vice chairman of InfoEdge, which remember operates Naukri, Jeevan Sathi, 99 Acres, also an investor in Zomato and Policy Bazaar, which are among the unicorns that have announced plans to go public. We also have Kalra, the founder and group executive chairman of MakeMyTrip, which of course is India's leading online travel platform. Now, interestingly, both Sanjeev and Deep, they're one of India's earliest internet entrepreneurs who have successfully managed to take their companies public. Sanjeev in India and Deep in US. So we have the perfect combination to give us the view of just what it takes to do an internet IPO today. So that's why we've called it the art of the internet IPO. Sanjeev and Deep, thank you very much for joining us on Moneycontrol Live. And those who are tuning in, please keep sending in your questions. We want to make this as interactive as possible. Before I get to internet and IPO, something very interesting that I observed in both your journeys. Both of you come from the same school in Delhi, St. Columbus, the same college, St. Stephen's, where both of you studied economics, and the same B school, IMA. And then both of you start up internet businesses, then you're involved in Delhi NCR. So, take us through your own relationship, friendship. How many decades does this really date back to? Sanjeev, you want to start?
We were in different dorms in IMA, I think.
Yeah, I think we were in different dorms. But it's very simple for me. I normally let Sanjeev go first, but I have to answer first. I'm just following his footsteps. So it's very simple. He's senior to me by, I won't say how many years, but I just simply followed what he was doing.
So look, I think we met first time around 89, 90. So it's about 30 years now, 32 years.
That's right.
And he was not yet in IMA. He was on his way to IMA. That's when we met.
Yeah, Sanjeev and a bunch of friends used to run IMS classes. I think it was called IMS.
Yes,
and
IMS.
They were prep classes for people, I think, who had cleared the exam, but to help them through the interview and GD or just overall prep them. And it had created quite a buzz because there were seniors. I think one of them was 3 batches my senior from IMA, Pavan. And there was a whole bunch of them. And we would go to, I think it was Lady Harding College.
Lady Irwin
College. We would use it. They would use it in the evening. And, I think they helped. There's no way of knowing how much they helped, but they helped. I got through. But more importantly, in my first summer, he offered me a job in IMS, gig economy, to earn some money,
Wow.
helping the next round of guys. So Sanjeev has been an entrepreneur, I think, right out of school, out of college. So, and that's how we met formally.
Right. And, we're in a very interesting year. I can't remember the last time there was so much enthusiasm around internet and IPOs. Because if I look at it, in the last 2-3 decades, there have been exactly 5 or 6 internet IPOs that have actually happened among Indian companies. You've had InfoEdge, MakeMyTrip, Matrimony, IndiaMart, and perhaps an Affle, and Just Dial. But 2021 alone, we are talking about 6 or 7 IPOs. Zomato, Policy Bazaar, Delivery, Nykaa. There's buzz of Freshworks and Flipkart in the US. So what do both of you make of it? Is this the tipping point for India's new economy, so to speak? The time of reckoning after this huge fund infusion that we've had in the last decade? Deep?
Okay, I thought we should let Sanjeev go first, but since he'll have the last word, I think the economy, Indian internet economy is indeed coming of age or has come of age now, and it's taken a long time coming. So, for the longest time, we've been saying we're almost there. But the reality is that COVID, like it or not, has actually accelerated the movement from offline to online. Most businesses, perhaps travel being one of those who have been hit the hardest. But if you look at most other businesses, people not only adopted online because it was easy, now they adopted online. Even the naysayers or the fence sitters who were saying, hey, we'll go online to check pricing, we'll do this, but eventually I want to buy this offline, or I'm going to call up someone trusted. There was no one really to call, or there was no other way to go. The physical way of doing a lot of things, there was no option but to order or to book online for many, many things. And that's when I think people had eureka moments in millions where they said, hey, this is so simple. So a lot of people had never used probably online payment methods. And suddenly they said, hey, this is so simple. And as we know, it's a one-way street. There's no going back. So according to me, we had 500 million users pre-COVID. We had only 100 million buyers. I think by the time we are done with COVID, and that itself is a question mark when, but even by the time we are done with probably 2021, we would have doubled the number of buyers online. We would probably be at 200 million. And, e-commerce guys might know that better, but that is our gut and that is what we are seeing. So clearly the markets come of age. There are enough people buying. We always had a vibrant economy. There was no question. And therefore, all these companies who were leading their respective spaces now have the critical mass. They have the resources. Private markets have been very deep. They've had the resources to go on for many rounds without an IPO. So now they're IPOable. If they want to IPO or not, obviously their prerogative. But the fact is they've got the scale. In many cases, the predictability. Very often we say, what do you need for an IPO? It's the predictability really of revenue and of cash flows. I think a lot of companies have now reached that level. And added to that, most importantly, is there's a lot of money in the markets. So as Moneycontrol knows very well, there's so much money in the market today that, I think it's probably no better time to have done an IPO. So that's my two-bit on it. But let's hear from Sanjeev.
So I think to add to that, I think what Deepa said is very right. I think to add to that, look, these are investments that were first made 2008, 9, 10, and maybe a little later also. So Policy Bazaar got its first round in 2008, Zomato in 2010. These companies, after 10, 11, 12 years, 13 years, are now maturing at a size and scale where they can go public. There are other more recent companies, perhaps also which have reached a size and scale, and therefore they can go public. So these are the seeds that were sown 10, 12 years ago, which are now maturing. And it had to happen. If it didn't happen now, it happened 2 years later.
Right. Sanjeev, since you mentioned Zomato, Policy Bazaar, in fact, Dipinder in a recent interaction mentioned that, he counts you as a mentor. So what are you telling these entrepreneurs in terms of the mindset that they need to have when they transition from a privately well-funded unicorn to a public listed enterprise where, the stakeholders you answer to will be very different. It will be a wider set of stakeholders. And in a sense, you will manage a company which is the property of the commons. You will have retail shareholders, institutional shareholders. So what are you advising, a Dipinder Goyal or a Yashish Dahiya today?
So both Deepinder and Yash are very smart guys. And so we've been speaking about stuff, but the truth is they already know it, right? I mean, it's a different level of scrutiny when you take public money as opposed to private money, right? You are now governed by SEBI. You have to sign agreements with the stock exchanges. The kind of disclosures, the kind of onerous responsibilities under the Companies Act that listed companies have to go through. Those are different order of governance. And you got to tool up for that. You got to gear up for that. You got to sort of augment your board. You've got to figure out your internal processes, your disclosure norms, and so on. So they're doing all that. Now we ourselves, when we went public in October 2006, we first began to talk about the IPO in Feb 2005. By April 2005, we had revamped our board, gotten a whole bunch of independents. I stepped down as chairman. It took us maybe from the time we appointed the merchant bankers in September 2005 till the IPO took about 11 months, 13 months. It's a long time, right? During that process, we had to do 3 stat audits, because each time we had to do a new stat audit and something would come up and delay it. And so by the time we submitted the RFP, one more audit had to be done. So we did stat audits in December, in March, and then in June, and only then we went public. So therefore you got to beef up your finance team, your secretarial team, your internal processes, your auditors. They have to sign off on much more onerous documents. So all those things have to be done. It's a different level of governance and scrutiny.
Right. Deep, was it even more difficult for you because you listed in the NASDAQ, going through the whole process of filing an S1, which is supposed to be even more, strict in terms of compliance. So what was running through your mind in terms of the transition you had to make in 2010?
Yeah, I would expect so, Chandra. I haven't done both, so I can only speak for. Actually, we filed an F1 as a foreign issuer. S1 is for American issuers. But it was hard, and I remember Sanjeev. So Sanjeev was on our board from 2005 to 2010. He's still very much on our advisory board. And I remember him giving us really good counsel. He said, guys, this is not easy. And it's also a long thing. More than not easy. He says, I'm pretty confident you guys run a good company, etc. But it took us 13 months. In fact, I remember him saying it could take probably 18 months. And that did freak us out. I have to be honest. Both Rajesh, who's my co-founder, then was CFO and now is group CEO. It did kind of scare us a bit that what are we getting into? But I think we were so keen to IPO, we said we'll go ahead. The US versus India decision is an altogether different story. If you want, we can talk about it. But it was a big decision on which way to go. Since our holding company was overseas, we had that option. And even today, while the US listing is definitely, I think, more onerous, I think stricter. SOX compliance is strict.
Yeah.
That said, I think the SEC is also, like SEBI, pretty businesslike, very mature, also very used to, I think, seeing internet companies, even the investors. So for me, what finally tilted the balance, by the way, the board was split down the middle. I took some time off. I spoke to 6 different people who had listed in one or the other kind of geography or domain and asked them their views. And finally, I said, okay, I think we'll go to the US only because of one reason. And the one reason was that internet companies in India that were listed were actually very few. It was only Naukri, really, InfoEdge.
Yeah.
And so we weren't confident that they got our model. And let's not forget, InfoEdge was profitable. We had just turned the corner. InfoEdge, collected their monies from enterprises. We wanted to collect our model was that individuals paid us online. So it was a different model. And I think I took a lot of comfort from the fact that there were already 4 or 5 listed online travel companies in the US. So the model was understood. So we would go in saying, hey, we are now the Expedia, at that time Travelocity of the US, of India, or the C-Trip of India, or Booking, etc. So I think that model would mean lesser education. It is tough. It took a toll on us for sure, but it's very rewarding. Very smart investors, lots of learning each time you hit the road. So for the first 5 years, we didn't miss a single quarter. 20 quarters, Rajesh and I would hit the road. We would spend a whole week every day in a different city. Maybe Boston was 2. And it's no fun, I can tell you, because morning to night, you're actually telling the same story. It's just a different investor, and you have to seem very excited, although you're jet lagged, you're tired, etc., etc. So I think it's rewarding in the fact that they get the model, they get the growth. And even if you look at it today, India's not recovered from COVID, nor has the world. In terms of revenues, our last quarter reported was October, November, December. We turned a profit. We showed a good quarter. We were rewarded for that. But the outlook is very positive. So the market's on all-time high in the US. We're being rewarded, I think, for that. Our stock's on a 2-year high. I can't take credit for that. I mean, I can only take credit for what we have done and the results that we have shared. But obviously, the market this is about expecting the future to be better as the world gets out of COVID. The company seems to have done the right things, etc., etc. So it's interesting. I mean, I don't know if I have the stamina to do a dual listing, but only then would I be qualified to give you an answer which one is better to do.
Sanjeev, what's your own sense? Is this possibly the best time to list in India? Is there more maturity in terms of the way investors view internet companies? There is, of course, consumer behavior, has adapted big time to online. So, will all this translate to how retail investors view internet companies, or will there be, still more emphasis on companies that are profitable, that are hugely profitable? What's your sense in terms of the
Look,
Indian investor mindset?
Indian investors do prefer profitable companies, no two ways about it. But having said that, the market has matured. When we went public in 2006, people, even institutional investors, had to explain internet. And for the longest time, the bulk of our public shareholding was dominated by overseas institutional investors who already understood internet. Now it is the bulk is Indian institutional investors. So I think the market has matured. I think people do understand it. I think there are 3 or 4 or 5 listed companies in India. I think people are more connected to what's going on in the rest of the world, and therefore I do think it's okay to go public in India right now. Having said that, look, Nasdaq will always give you a slightly higher valuation. You got to understand that. But in terms of regulations and compliance, it's perhaps a little more onerous. Not in the letter of the law, but in the fact that you have to comply with a market that's in a different time zone. You have midnight investor calls. You've got a real risk of being an orphan stock should not enough banks cover your stock. Your brand, if it's being built in India, it's not known over there. These are all risks. Your auditors and legal sign-offs are more expensive over there. And therefore, in general, it's a lot less complicated to go public in India if you are capable of going public in India. But loss-making companies, without path to profit, maybe slightly easier to go public in the US.
Right. And Sanjeev, in terms of, the way you prepare employees ahead of an IPO, again, what was your own experience? Was there apprehension? Was there excitement? Because they will be able to unlock value out of a listed company. But what did you really have to do there?
Actually, not a lot, except to educate the insiders on insider trading and insider information. Just be careful. This is what it is. This is what it isn't. But other than that, it was fine. The truth is the equity sort of cult still isn't there as much in India among retail investors as it is in the West. Proof of this is the fact that while our IPO was oversubscribed 55x, our employee quota was undersubscribed. And there was going a begging. People are just not into the stock market at that time.
Deep?
Yeah, I think, I would say pretty much the same. I think employees are very excited. Let's face it, an IPO is a great financial milestone for everyone. So it's excellent for the company because it puts you in a different league. It makes your stock currency. It gives you access to public markets. IPOs are supposed to typically raise, primary money. You can, as founders, you can take some chips off the table, but I always warn founders, and I'm sure we'll come to that, that it's only base camp. There's a lot more to be done. You're the one who will be definitely taking the company forward. So entrepreneurs should think very hard about the IPO. When it comes to employees, it's awesome if you have employees who have stock. When we IPO'd in 2010, 70% of our team had stock. So it was really a very, I think a heartwarming kind of moment for everyone, and especially for founders to see everyone benefit from that. We also got a great pop. We went up almost 100% on day one. So it was pretty exciting. We went out to raise 70 million plus green shoe. We had a book of about $1 billion plus. So not, it was obviously a lot of demand because there were so few IPOs coming out, but that meant you can get a very strong pop, and people, rightfully made a lot of money. I don't think there's anything more fulfilling for any entrepreneur anywhere in the world, for his team who's kind of worked with him or her from the beginning, worked really hard, put in their sweat and toil, given up easier options, corporate jobs very often, taken the risks, been with you nights and nights, and kind of make it happen. So I think that's very rewarding. Also for investors, it's great, right? So private market investors, that's what they want. They actually, the preference for all venture investors, private market investors, is an IPO, because you typically get the best value. You also get the flexibility. There's a lot of liquidity, so you can shed everything. You can time it versus a trade sale. A trade sale, you agree on a price and you're done. That works for some. So I think as an exit, it's tremendous. And in terms of coaching, Sanjeev covered it. It's the people in the know who need to know the rules, and they're very strict rules. India or US, I mean, they're very, very strict rules, and you have to take them very seriously. You cannot even, deviate slightly from it. And we've seen draconian things happen. Happy to say we are almost 11 years listed now, and thankfully we've never had any issue. And it comes down to how strong your processes are, how strong a CFO is, how strong the audit is, how tight a ship you run. If you run a tight ship and you're comfortable with it and you have nothing to hide, like I hear of companies, by the way, even today, and no names, who run 3 sets of books. One for investors, and the investors know a different one is going to the IT department, and the third one is the real one for themselves or something. My God, that's a disaster if you want to IPO. Not at all. You have to be squeaky clean. Everything has to be out there, whether it's a loss or not, it doesn't matter. But that is the whole thing about compliance, and the scrutiny is great. I think Sanjeev said it very rightfully. There's a lot of eyes looking, and the penalties are great too. So I think we have to take it very seriously, and everyone has to ask themselves, particularly the founders, do you really want to IPO? Are you ready for the long haul? This is not something about you're done. If you don't, it's perfectly okay. If you want to be a serial entrepreneur, you want to sell your company and you want to set up another one or do whatever else you want to, that's perfectly fine too. So it comes down to a very individual preference. And then you have to take your people along.
What you said about having different set of books brings me to our next question. Sanjeev, why does it take an IPO for a company to become compliant and, to spruce up their governance and their board? Why can't you do it as an unlisted company?
We were always squeaky clean, and so was
MakeMyTrip. No, not you. Yeah. Yeah.
So the issue is not that. The issue is auditors, SEBI, the stock exchanges require a different level of disclosure and compliance norms because you're a public company now. Okay, so let me tell you, we had to effectively hire a whole new second line in the finance team to do the IPO. Because you had to just augment bandwidth because your processes had to change. So let me tell you a little thing. We take subscriptions. Naukri has got annual subscriptions from its clients. So we recognize the revenue. We collect money upfront and recognize revenue 1/365 every year for an annual subscription. Now, to do this, we had built our own in-house platform. When we went public, the same auditor said, hey, now you're going public. I can't sign off the accounts if you're using that platform to do the allocation, or do the amortization over 20 days. I want an industry standard external product. Otherwise, I'll have a problem signing off. Now, to implement a change like that took a year. It's a small, seemingly small thing, but actually it's non-trivial. Because the moment you have a public market sign-off, it's a different level of governance. Now, it's not that we were doing any cheating in the accounts. It's just that the auditor said, I want something which you can't manipulate. Not that you're manipulating it, but I want an external thing. And I think that was perfectly fine. It was a reasonable request from the auditor's point of view. We complied immediately, but it took a year.
Right. Before I come to my next set of questions, Deep, some questions coming in from people who are viewing in. And I think this one is for you. You can see it on the window. Apart from Corona, what are the challenges for MMT? And also a word on the competition since, MakeMyTrip did an IPO recently. Anything that you want to add there, Deep?
Yeah, sure. So apart from Corona, what are the challenges? Yeah, I think it's a good one. Corona obviously is the biggest. And like I said, domestic travel coming out of it nicely. Right through, I think October onwards, it's been very good, right up to Feb. A little bit of a hiccup now because of what's happening in Maharashtra and a few other parts of the country. And, obviously, we are all hoping this is not a second wave. It can be nipped in the bud. The vaccinations pick up more steam. 2 million a day is pretty good, but it's a huge country. So that's obviously the big one. I think beyond that, being in the internet sector means not only change is the only constant, it means disruption from new ways of doing technology, new smart companies, especially in areas where the barriers to entry are small. Sure, we've got, I think a great brand that we've built, not just one. We have MakeMyTrip, we have Redbus, we have GoIbibo, we have three very strong brands. But there's always someone coming from the far left, so you've got to keep an eye open for that. I think it's easy to say, but I think you really have to function as though you're still a startup. So someone in the company and probably the founder has to be thinking that, listen, what is the next thing we can be doing? Because doing the same can be left up to some other folks. You can do more of that. Execution is very important. I will never, belittle it. I think the devil is in execution. But at the same point of time, you have to have a parallel track running on saying, okay, what are we planning not for the next quarter, maybe not even for the next 3 or 4 quarters, but for the next year and the next 3 years, because sometimes these new platforms take that long to build. It could take a year to build. So I think keeping an eye on long term and balancing it with short term becomes very important. And actually, it's linked to your discussion on the IPO, which is, well, the market wants to see quarterly results. How do you actually balance the two? How do you make long term investments while at the same time, keeping your analysts and your investors happy with quarterly results? And anyone who says that there is no dichotomy there, there's no paradox there, I don't think that's true. There is. It's tough. You've got to manage both. You've got to juggle both, and probably that's how you kind of divide up your roles and do it. So I think that'll be one of our biggest challenges. The other very big challenge will be an opportunity come a challenge, and I think it's the emergence of the homestay as mainstream. And this has happened in COVID. For the longest time, we were offering villas, homestays, etc. It was a very small thing. It was for some either evolved customers or some budget customers. It was not mainstream. Mainstream people still said, we want to go to a hotel. Now, suddenly, people have said because of COVID, hey, I want a homestay. And I want a very good homestay. I'm happy to pay hotel pricing. Give me a great homestay with all the services. So I think that's a great opportunity, but then this very fragmented. So you got to tie up with each of those homes. You got to bring them onto your system. You got to digitize the inventory. Not easy. It's an interesting challenge. I like this kind of challenge. So I think that will be fun. And then there are new technologies also, like obviously now app is commonplace, right? We get 90% of our business coming through the mobile, of which 90% comes through the app, which is normal. And it's obviously very powerful. You can personalize a lot. But I think going forward, how you build in data science and how you build in AI into all of this is going to be key. We're all tinkering with it. We have chatbots. They meant to be learning a lot, but they can get much better. How Chandra should be treated differently from Sanjeev, differently from Deep when we come in each time. What should we see? So I think hyper personalization for travel will be, for me, delight, and I think that's the way it's going. So I think there are some really exciting challenges for us. The second part of that was, IPOs. Had an IPO recently, great demand. It's a modest sized company. Most of it, by the way, it was all secondary. But yeah, they've managed to show that, companies which are focused and yet, doing their bit can go ahead and IPO in this market, and they got a great response. So, it just goes to prove what I was saying. Great time to IPO. If you have a good thing going, it's probably a good time to come out.
Right. Sanjeev, there's a broader question on, food delivery apps. They don't make profits yet. Should retail investors stay away from this space? I'm not going to ask you to give stock advice, but what would your broad sense be, in terms of how investors should view growth companies that could see huge potential going forward that may not make profits today?
So I think you want to see. I can't comment on. I've been advised by Zomato's lawyers not to answer stuff like this. Okay, so I can't. Yeah. But in general, both Zomato and I suspect Swiggy, although I've not seen Swiggy numbers, but going by the brand perception in the market, I think both are good companies. I think both are growing well. I think both are trending to good unit numbers. I can say for Zomato for certain that it's got very, very good economics and good growth. It's a great brand pull. But having said that, look, you got to figure that one out yourself. I can't comment on it.
Right. Just one thing that I wanted to ask both of you on, pricing and IPO. I remember, I think Info Edge's listing price, it was at a 93% premium. And even Deep, your IPO was valued at what, 480 million, and you ended up at 800 million, which was a huge pop sometime in 2010. Now, investors traditionally believe that, an IPO pop is not such a great thing because you're leaving a lot of money at the table. So how do you really go about pricing an IPO? Is there a risk that you could underprice it, leaving a lot of money at the table? Because I remember ahead of the IPO there was apprehension that perhaps this is too high a price. So Sanjeev and Deep, if both of you can weigh in here, this is a very difficult thing to tackle.
Yeah, Deep, you want to go first?
Sanjeev, you can start and maybe Deep can add.
So look, it's a tough one because as a company management, as a founder, as an entrepreneur, this is probably the first time you're going public. Okay, you've not been in another company that's gone public, right? Now, what you don't want is your IPO should fail. So you will tend to be risk averse, and you'll say, I don't mind leaving some extra value on the table, but I don't want the IPO to be undersubscribed. Okay, now we were the first internet company to go public in India, and we went on pre-roadshow meetings to just suss out how people view our company. This is way before the IPO filing. And the feedback we got was people didn't really comprehend, and they were looking at us with the same prism as they would look at IT services companies, which would have a lower multiple. So we prefer to be more conservative. And yes, did we leave too much value on the table? I think we did. Did I feel bad about it? No, I felt great actually because the IPO succeeded. But this pricing was vindicated because in the nadir of the global financial crisis in 2009-10, we were still above IPO price. So we were clear that that nobody who buys shares from us should end up losing money. If you buy from the market and lose money, we can't help it. But if you buy from us, you should not lose money. That was something which I felt that everybody who buys from us should make money. And there, I think even in the nadir of the meltdown, we were above IPO price. Our share price went down 75% in 2009-10, from 1400 to 376 or something. We were still above IPO price, which was 320. So I think it was fine.
Deep?
But I think there was, so at least in the US, I think you can price up. I mean, I think here there's a range. There you can price up. So when you see your book at the end of the day and you're oversubscribed like 15x or something, you have the full flexibility to price up. So our bankers came back to us when we were doing what's called allocation of the pot, and you're totally exhausted because it's been 2 weeks on the road, starting from Hong Kong and going on Singapore, Hong Kong, and going on all over the US, etc. But anyway, you're doing what you're doing, and they're saying, hey, you can price it up, you can move it up to, our IPO price was $14, and we could have moved it up, they said, even to the high teens. We were naive. So we also felt that, listen, let's not be greedy. They're the same investors who we're going to come to and pitch later, because we got counsel also. And so we let it be. Clearly, it would have made no difference. And anyone who was selling secondary at that point of time, could have enjoyed maybe 20% more. So of course, there's a little bit of regret. But that being said, I like Sanjeev's philosophy, and we kept it, pretty much the same. That, listen, at least people who are buying stock when the company is issuing new stock should not feel under the water. And therefore, it's really a relief, because our stock's obviously been up and down, and we've seen the whole thing right now. Like I said, it's it's on a 2-year high. But the point is that it feels good when you can go back to your investors and show them that you have validated their trust in you. You've given them a return. Market buying and trading is something totally different. So yeah, I think the flexibility is there. You can definitely price it up. If I was to do it all over again, yeah, perhaps we could have priced it up another 10-15% after that, and nobody would have felt bad, because the pop was 90+%. So I mean,
right.
even people who came in, I mean, I think we ended the day at $27. So even if you came in at $16, you made a lot of money, and probably that was the right thing to do. But anyway.
But how have the natures of, the IPO roadshow itself changed? I mean, in the post-pandemic world, have you, spoken to entrepreneurs or bankers? What has fundamentally changed in 2020, 2021? Uh, Deep, you want to go first, and then maybe Sanjeev can add.
I'll tell you secondary. I mean, we unfortunately don't have any of our investee companies who are getting ready for IPO. I hope they will soon. So Sanjeev knows more. So we're not really talking or tracking too many IPOs here. Some companies where one is a early stage or an angel investor and all are definitely doing very well. So I think fundamentally it's demand and supply again, right? So the first point I made, firstly, a lot of good quality companies. I think someone said the number today is already 40 or 50 unicorns. If unicorn is a good measure, it means your $1 billion in valuation private space. By the end of the year will be 60. And then there was a report which the other day we were discussing at TIE, which was saying 100 unicorns by whatever.
Yeah, that was
year.
yeah. In
So
fact, sorry, go
go
on.
ahead. Yeah, so basically, I think we've got a whole lot of good companies who've got scale, which didn't happen earlier. So it's all coming together. At the same point of time, you got liquidity in the market. So it's fertile ground, right? And not all these companies will have a dream run, but that's part of the deal. But I think the good companies fundamentally will do well. Look at the IndiaMart IPO. I used to sit on the IndiaMart board as an independent for a few years. And, I have a lot of respect for Dinesh and his team and how they navigated ups and downs and very clearly focused, IPO, delivered, done so well and continue to do well. I mean, forget the return to investors. It's just, a company which people would have said, hey, now this is kind of, it's almost stationary. It's almost like on the same, nothing great is happening. But they reinvented themselves. There were some new technologies they put to play, which were big bets and big punts. So I think that paid off, and I'm really excited about seeing some of these companies now go ahead and get their place in the public market sun.
Right. Sanjeev, you've been very vocal about this whole issue of flipping in the last few months. And now you have this whole SPAC phenomenon, this huge craze for SPAC in the US. There is data that says, almost 44% of money raised from public markets were from SPACs. SEBI is apparently constituted a committee to review this, to review a SPAC-like mechanism in India as well. Will it be right to equate, a SPAC-like listing to flipping? Because technically, you are an Indian company that is being merged with a US blank check company. So, how should one really view this?
So I think SEBI's move to have an Indian SPAC is a great idea, because then you don't have to merge with the US company. You can merge with the Indian company listed in India. Second, you see, if you are an India domiciled company with Indian shareholders, you have to jump through a few hoops to merge with a US-based SPAC. So an Indian SPAC will be actually, from a regulatory perspective, much easier to do. So I, prima facie, without seeing the fine print, I'm totally supportive of this idea of SEBI having an Indian SPAC.
And even the move on overseas listing, where they said an Indian investor, Indian company listing overseas need not be compliant with Indian regulations. Again, are these enabling mechanisms
have those rules been finally announced?
No.
So
there are discussions ongoing.
Yeah, the discussions, right? When they are announced, then I think we can have to read the fine print before you actually comment on them.
Right. But would all this make India a more attractive market in terms of capital formation, wealth creation?
It's important that investors in Indian startups get profitable exits. Right? Now, if you leave out Flipkart, there haven't been many strategic sales happening, which will give the kind of returns that VCs hope for, and which will motivate more venture capital coming in. Okay? So therefore, public market listings become a good option, but there have been too few. Where investors have there's been a public market listing, investors made a lot of money. So you do need to ensure that investors in Indian startups do have exit routes. Whether it's an India listing, whether it's an India SPAC, whether it's a overseas listing permitted by Government of India. Okay? Because without those exits, why will more money come in? And we need more money. So if investors don't make money, why should they come back again and again? And why should new investors come?
Deep, is the environment today more conducive for a listing in India? Because the argument has always been that technology companies prefer to list on Nasdaq because of valuation, because of regulations. But if you had to go back and do this, would India be a more attractive place today?
Yeah, a lot has changed, I think. So definitely, it's not just InfoEdge which was out there listed, like I mentioned, and you enumerated quite a few actually. Just Dial, India Mart, Apple.
Matrimony.
Yes, of course, Matrimony. So I think we've got, definitely more companies. Also, let's face it, the borders have become more kind of porous, right? So the investors, almost all the international investors in this 10 period time have now got the approvals to go ahead and invest here in Indian companies. So I think that has changed. So it doesn't have to be a circuitous kind of this thing. So it's definitely much better. I think, SEBI is very progressive. They are definitely looking at a lot of these new options also. And they would ideally want to. So yes, it would have been perhaps, an even tougher decision, and maybe would have tilted the scales towards India now. The biggest thing we lost out and you lose out when you don't list in your own market is your branding. I think there's a massive, branding impact that you get, and that we were cognizant of. And I think right now some of these companies are doing the right thing by, eyeing the markets right here.
So one of the biggest externalities of when we went public, which was not intended at all, but it was a positive externality, was that our employees who had not even participated in the IPO or were not, they came and said, "Hey, my uncle said, hey, you work for a listed company, fantastic." And so the family affiliation that they work for a good company was a huge positive spin-off.
Sir, shaadiyan ho gayi thi. I think on the back of that, people were getting married saying that you now work for a listed company. So,
wow. That's a positive outcome. Sanjeev, we are getting more questions from viewers. One on the whole internet IPO phenomenon. Is there a valuation bubble created on account of the pandemic? What would you make of it? Are the valuations too frothy at this point, not just in India, around the world? This is something that everybody is concerned about.
So look, every time I think the valuation is frothy, the market goes up more. So I don't know, but look, this is basically $4 trillion of Fed stimulus at work, right? When you pump in this kind of money, some of this liquidity finds its way to India, and it finds its way all over the world, and stock markets go up all over the world. Now, $4 trillion is a lot of money. It'll last a while. When, I do not know.
Right. A follow-up question for you, Sanjeev. You've always stressed on the fact that a founder needs to be as close to the customer as possible, constantly tracking the customer and, tracking the customer mindset. How difficult is it to do this once you become the CEO of a listed internet company? Because half your time will go in compliance and answering to institutional shareholders and retail shareholders and the media, this quarter se quarter tak phenomenon. So how do you ensure that you do this? Or in an era of internet and social media, has it become easier for founders to be more connected to their audience, particularly for consumer internet companies, because the feedback is very instant?
Yeah, I think it's really important that CEOs don't get too distracted by being listed, that they take the eye off the ball in business. And I think that's really important. What it also means is that you've got to have people in specialized functions for investor relations. Your CFO should be good. I meet investors more often than Hitesh does because he runs the business. And we don't want to take up too much of his time meeting investors. Also, I think the next level of management under Hitesh, we invested a lot in it. And the founder doesn't have to be the only one meeting customers and understanding customers. You've got to have empowered people down the line to do that.
Deep, how difficult is it for you to focus on the big picture and at the same time get into these micro issues? Because every time someone misses a booking or if there is some refund issue, the first thing that they will perhaps do is, tag Deep Kalra and MakeMyTrip.
Sure. I think we get our share of that. And what makes it worse is when airlines aren't giving back the refund money. So we are facing the brunt of that, and we do sell 30% of India's domestic tickets, so we face the brunt of that also. But luckily there's a great team. I think one can get tagged and all, that's fine, and quickly alert the people. In fact, I like it. I like to read the escalations. It kind of helps you have a finger on the pulse of the customer, which is very important, pulse of the business. I think having a really good line and a team is the most critical thing. Like Sanjeev said, so in our case, Rajesh is Group CEO. He does that full time. He also meets investors, so it's quite incredible. I obviously can spend more time away from the operational parts of the business, which helps too. So I think we managed to kind of divvy that up quite okay, and it's working quite well. We have a CFO who's been there now for a longish time, 8 years, and Mohit is just incredible with managing investors and analysts. And we also have a director IR, investor relations, who's actually based in the US, in New York. And we've always consciously had that position because a lot of customers want to reach people, their daytime, want to have a chat, pick up the phone. Like I like to say, dial a +212 number. It matters. So I think we've had that, and John's been with us from the IPO. So I think having a strong, steady team is really good with very clear responsibilities, and then being able to chip in. So my favorite, one of my favorite COVID stories actually is we did a raise of a convertible bond offering in Feb, just after our results for October, November, December, and we didn't have to obviously travel. We did it sitting right here on our desks at home. Calls from I think 8 in the morning with Hong Kong till 1 or 2 in the morning with the West Coast, and the marketing was done. It was just super efficient. We spoke to investors from probably 10 different cities. Didn't need to travel at all. Saved so much time, money, energy, and everyone was happy with the outcome. So it works for everyone. So maybe I know it's not very good for my travel business, but I think the fact that you can do a lot of investor marketing and in fact even fundraising and IPOs, there have been IPOs that have been raised entirely on video platforms like this one, just shows that maybe a lot of that travel can be avoided, and that time that you save more than anything else, more than the money, can be put into the business. So that's what I find the most efficient part of this. So hopefully some of these lessons we are learning won't go away, and we can create more time. So, I think we're definitely going to look at the video platform far more seriously, even when COVID's over, when we're out meeting investors. And any good investor will appreciate that, because they will say you're saving the company time and you're saving the company money. And that's what I'm investing behind. So I think it's a very practical learning.
Right. We're winding down to the last 10 minutes. Sanjeev, in our previous episode of Masterclass, we interestingly had two bootstrapped entrepreneurs. We had Zoho Sridhar Vembu and Zerodha's Nitin Kamath. And I said one of the reasons why they didn't take any money from investors is because they simply don't like taking phone calls from people who disturb them. They're very private individuals and they don't want to be disturbed. And Sridhar said, I would have never been able to work in a village in Tamil Nadu and run a SaaS company if I took money from investors. So has this ever crossed your mind that, I wish I was a bootstrapped company that did not have to answer to so many people? If you had to go back and do it all over again, would you do it differently?
Not really. I think, so I bootstrapped as an entrepreneur for 10 years. We bootstrapped Naukri for 3 years. Finally, we raised a Series A from ICICI Venture. And truthfully speaking, this company would not be here today, where we are, if ICICI had not invested at that time. So while we worked hard, while we worked smart, while we were lucky, I think without the right investment partner, we would not have been able to make it. So it's
also had a multiplier effect in terms of wealth creation, because if you look at the InfoEdge stock itself in the last 10 years.
That is correct. We would not be here had we not raised money at that time.
Deep, what about you?
Yeah, quite similar actually. I think while it's great, I mean, if you can do it yourself or you had your own money, that's awesome. But the reality is, at least in my case, I can say Sanjeev's case, you're professionals. I've worked a few years, made a little bit of money, no really massive kind of family businesses to fall back on. So I think it was the only way we had. Our first 5 years, actually, I would say first 4 out of 5 years were totally bootstrapped. I mean, hand to mouth existence. And I'm glad we did it because very simply, it was the natural selection at play. So people who believed in the business stayed behind, people who didn't left. And thankfully, we were, stubborn enough to keep plodding along. But 2005 onwards, I think we got really lucky with great investors. And we had, safe partners come in then. Called Elevation Capital now. Then we had Helion and Sierra split the next round. And then finally we had Tiger Global. So we had 4 investors in our pre-IPO journey. And, each one of them has been very, very helpful, supportive. Some of them stayed on even post-IPO for the longest time. And in fact, one of the investors from Sierra, Tim Guleri, is on our board today as an independent after selling out their stocks. So, and these are all very good relationships. All of them are kind of long standing. They've seen us through the toughest times. So I wouldn't have it any other way. We would definitely not be, the company we are again. Like Sanjeev said, we would have probably been obliterated by someone with $100 million, and that's today almost chump change, right? So I think you need the.
Having said, Chandra, I mean, I think I know both Sridhar, Rembu, and I know Nitin Kamath. I think they're running fantastic businesses. I admire them. And I think it's great that they've come where they've come without raising money.
Right. Sanjeev, another.
Hats off.
Yeah. Sanjeev, one more question coming up from viewers. How long can a business sustain valuations based on revenue multiples? When should investors start valuing profits over revenue in the life of the business?
So there are 2 questions there. The first question is, how long can a business sustain valuation based on revenue multiples? Answer is simple: as long as investors are doing that. Right? Now, why did companies move and become more conscious of path to profit, margins, EBITDA, break even post-March last year? Because of COVID. Because investors got more conscious, they got cautious. And the entrepreneurs and founders themselves got more cautious because they weren't sure if they're getting the next round. Okay? So now today, the language is different. People are talking about path to profit in many, many cases. When should investors start valuing profits over the life of a business? So, look, if you invest in a company and the competition is raising money and other investors are coming into the competition and behind this company, valuing the revenue multiple, revenue multiple valuation, that will be the market then. But at some point in time, and there's no sort of hard and fast rule after 3 years, after 5 years, no. At some point in time, people say, okay, guys, let's start looking at profits. It happens in life of every company. And to a large extent, it's got to do with capital availability.
Yeah.
Right. Deep, if you want to add to that.
If capital is available abundantly and easily, you will go for top line growth. If capital is scarce, you will say, I want to generate internal accruals. As simple as that.
Yeah, and I mean, the only thing I would add to that, the greatest story around is Amazon, right? So if you look at Amazon, for the longest time, people said, hey, the company doesn't make money, the company loses money and stuff like that. And then just look how that whole narrative changed in the last few years with scale. And similarly with a lot of the other internet companies. So scale is critical. I think the measure we look at internally, and everyone should, is, we know now, unit economics. It's a term which probably we learned only in the last decade, but it's so important. If you're getting better on every new kind of transaction you do and every new customer you acquire, you're on the right track. And coupled with that, and I think Sanjeev used to stress this a lot, and he was absolutely right on the board meetings, and now I do it, is your repeat rate. And I would just qualify that with your undiscounted or basically just get natural repeat. You can discount to get people to try you out once, but they should come back because they like your service. They should
lifetime value that you build.
Yeah, they should not come back because you're running a perpetual sale. So I think that becomes important, and the businesses that do that they have no turning back. So they just get better and better. So you can just, you can make like 1 paisa technically, but do 1 million transactions a day, and you might have a great business where you can make 1 rupee there. And then you start kind of tweaking that up, how you start making a little bit more money because you get better at your back end processes. And I think that's the key thing. And then natural rate of repeat. And natural repeat is the most important, I think, metric, because otherwise it's a leaky bucket. No matter what we do, you can keep acquiring customers and paying, and if 30-40% of them are not coming back, or 50 is not coming back, I think that money is badly spent, and you'll just keep on ending up in that. So, and the companies that we are going to see break out and do well are companies who have really improved. And I think COVID has been a blessing for a lot of companies, actually. Despite the horrible things that it's done, many have had to lay off people, etc., etc. It's been a blessing because it has pushed your back to the wall again. It has made you go back to basics and to once again see how can we do this in a much smarter manner, because the money train may not come on forever, or, because now suddenly, guess what? For a whole year and more, you got a period where you weren't judged on growth. So what could you do?
Right.
You had to actually focus on the bottom line. Now one shouldn't forget that. So I think it's been a blessing for us, by the way, in that sort of way.
Right. Last 3 minutes. I know both of you have a hard stop at 6. Sanjeev, in your journey as the chairman, now vice chairman of a listed internet company, what was your highest point and your lowest point?
So, I don't look back at high points and low points. I think every day is a new day and you keep working. But I think the highest points are always when you meet a job seeker or somebody who says, listen, I found my job through Naukri. Ultimately, customers give you your highest point, employees give you your highest points. Okay? So when an employee says good things, it feels good. When a customer says good things, it feels good. And when investors say you're a well-governed company or a clean company, it feels good.
Any lows that you want to share?
Low? Not really. I can't think of anything.
I alluded to the high point before. I think for us, financial milestone-wise, the IPO, and this show is about the IPO, but not IPO for the sake of IPO. I can tell you it was a crazy feeling. And there is no bell in NASDAQ, by the way. It's a buzzer, which you get to know only then. But interestingly, I think the high point was because so many stakeholders, including 70% of our team, had stock. So it was very emotional, and I'll never forget that. So it was special to be able to make it worth the while for their sacrifices. Investors, I love them all, but whether they make money on one deal or the other, it doesn't matter. They'll make money anyway. It won't change their life. But the number of people who bought their first homes and put away a kitty for various other things for their family is just, it's a feeling which is undescribable. So for me, that's very special. The low point, we've had many. COVID first quarter reporting, the quarter of April, May, June was 2 months of full lockdown and the third month of partial, barely anything. We reported a quarter where earnings were down, revenue was down 95.5%. I said it half in jest that this is not an earnings call, this is a lack of earnings call. And it was like just terrible. And then what followed 2 months, in that same quarter, we had to let go of 10% of our people, which was the toughest decision I've had to make in these 20 odd years at MakeMyTrip. And I really, the big lesson I've learned is every hire, you've got to think 10 times. You need another person because you never know when things will get bad. So that's got to be, my lowest point.
Right. On that note, Sanjeev and Dee, thank you very much for being part of Moneycontrol Masterclass episode 3 and really deconstructing the art of the internet IPO with so many rich anecdotes. I'm sure our viewers benefited from it. Thank you very much for joining us on Moneycontrol.
Thanks so much.
Thanks, Chandra. Nice chatting. Thank you. Bye-bye.